Okay, guys, here we go. It is March the 16th, 2018. I wanted to break down this odd CAD chart that you're looking at right now. I have a momentum indicator that I usually have at the bottom here, but I took that off. I took my trend lines off. I took off everything because I wanted to do a nice little training video on the odd CAD weekly. What I'm doing here is I am giving you some really good nuggets on price action. These are methods that I have uncovered from years and years, 14 years of watching price action on my charts. And these work very, very, very well. If you apply what I teach you here, you could probably do pretty well for yourself if you stick to the higher time frames and you stop trading the lower time frame garbage, and even without indicators. Yes, I have moving averages on here, which are very helpful. What you're seeing on here, this is basically a colored version of the 55 period simple moving average. As you can see right here, this is called the THV Coral. Very, very powerful moving average. You'll see a lot of reversals off of that, major reversals. That's why I have it on here. This chart is kind of choppy, but nonetheless, you can see a lot of reversals off of this little moving average. But the reason why I put these on here is because they're very, very accurate if you know how to use them. Same goes down here. This is the 750, 800, and 850 EMA. I like using these bands because typically when you come into these bands, you're going to see reversals off. That doesn't mean you get into a trade just because you hit the bands or these three lines here. That doesn't mean you get into the market just because you see that on your chart. Neither do you get into the market just because you see the coral. What I will tell you though is if you get confluence of these on different time frames, the chances of a reversal are very strong. The more confluences you have in the market, the better off you're going to be as a profitable trader. What you don't want to do is say, hey, you know, this works 60 to 70% of the time. So every time it hits it, I am going to take a short. I'm going to short here. 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 Going to short here. Oh, it's bull. Let's go long here. Oh, let's do it again. I mean, that's not, you're never going to make it as a trader like that. You have to make sure you have the confluences. But anyways, just that little bit on the indicators that I have on this chart. But again, the main reason I'm making this little video here is I want to teach you guys a little bit of price action because a lot of people don't understand how to read a chart properly. So let's dissect this just a little bit here. Again, this is the odd CAD. You're looking at a weekly time frame chart. I spend a lot of time on the monthly, weekly, daily, and even 4-hour time frames. Once we get into the 1 hour, I get a little sketched out, and I really don't like going below the 1 hour time frame. Yes, they can be helpful for a more precise entry, but when you're dealing with 4-hour daily charts, 15-minute doesn't really do you much good. But anyways, this is the odd CAD daily chart. Let's go to the weekly chart first, though, to see what exactly is going on. Actually, let's go to the monthly time frame chart. What is going on here? The MT4 platform will only go back this far, but this is a historic high on my charts. If you look at your time frames down here, this was 1996. We had a historic high on the odd CAD. If you pop up your trading view, let me get rid of these. I'm OCD about this, so this really annoys me. But if you look at trading view, you can get a little more data on a lot of these pairs. The MT4 won't go back that far. But even on the trading view platform, if you look, it goes back a few years prior to this. This is an ultimate high. Anytime you're dealing with a monthly high or a weekly high, especially if it's the first time the market is grabbing it, that is a huge area for a reversal. What I see a lot of times is traders will say, hey, look at this. We have a high up here. Who cares if it's never, ever been higher than this? And who cares if it's at $1.10, even though that's a huge psychological number? Let's go long as soon as it's broken. That is erroneous teaching, and you should never, ever, ever, ever do that, especially, let's say, for example, this climbed up, 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 up. by the time it got up here, this thing is so exhausted, it can't go much further. It's kind of like a runner who's doing a triathlon and they come across some big brick wall after they've been running for 26 hours straight. Do you really think they're going to be able to climb that wall? Absolutely not. They need to breathe or they need to take some kind of rest, and that's what the market needs to do. So if you push up into these levels up here, right around $1.10, do you really think this thing is going to continue pushing forward? Probably not. What it does a lot of times, though, is the market makers will spike the price just above it by a few pips. People will go long, newbies will go long because they say, hey, price has been broken, let's go long. And then in the meantime, they're laughing because they know they're about to slam price down. And that happens all the time, especially on the higher time frame charts. Even this right here, we came down to historic lows in the market. This was a massive flash crash. This was the financial markets when they came apart back in 2007, 2008. You can see what they did. They pushed price just below it, and then they did a mad reversal. The reversal down here was around 72 to 73. They took it all the way up to $1.07, $1.08. You count the pips. That's thousands of pips. That is not unusual price action right there. But having said all that, what I'm trying to get at here is you're moving into some historic highs, so you should probably be looking more for sells than you should for buys at this point. But that's the monthly time frame. Historic highs up here, keep that in mind. If we do pop into these highs, this is going to take a considerable amount of time because you've got resistance here and you've got some major levels right up here as well. So it is going to take a considerable amount of time. But if we ever push into these levels, I am doing some insane shorts. Because the market is just not going to push through that level. That doesn't mean 50% of my account. And when I say insane shorts, I typically trade 1 to 2% if I see a very good setup. Maybe 3, 4 is really pushing the envelope for me. So what you don't want to do is you don't want to have a large account and risk 10% on the trade and lose the trade because anything is possible with this market. So you have to be very, very cautious and you got to keep your risk under control. So even though I see a great setup like this, that doesn't mean I'm going to trade an obnoxious amount of lots. So keep that in mind. But anyways, going down to the weekly time frame. Now I'm going to show you a trade that I was giving to my group and we were watching this thing. I wanted this so bad and we came just shy of it, so I didn't get into it. I am a very picky trader. Unless everything sets up pretty much perfectly, I really don't take the trade. I'm fine with making, just a couple trades a month if I need to. Just keep this in mind. If you're trading 10 or 20 lots on your account and you make a 300 pip trade, which is not uncommon for me, or even just 200 pips. If you make 200 pips and you're trading 10 lots, you just made $20,000 on one trade. How many trades a month do you really need to take when you're making that kind of money? You don't need to take a lot of them. So just keep that in mind here. I am very picky. I'm very selective. That's why I'm extremely accurate when I'm taking trades or when I'm calling trades to my premium group because I do not play around. I make sure these trade setups are pure fire before I am willing to call these things as trades. So having said that, let me show you the level that I was watching for down here. I wish there was a box or something. I probably should have pulled this up on TradingView, but we'll work with this. I was looking for long positions right down here. Anywhere from really right here. This is my zone that I've been looking for. I will scale into trades. That doesn't mean buy some here, and keep buying as we go down. That's grid trading, and that's a big no-no. What I do is I come up with a zone where I believe the market's going to reverse, and then that's when I enter my trade. So this was basically my zone down here that I was looking for trades. Why was I looking for trades down here? Well, you have a head and shoulders pattern right here. It may be hard to see. Let me zoom in just a little bit here. It may be hard to see, but you can clearly see there was a shoulder here, there was a head here, shoulder here. If I were to pull this up on the daily time frame, which we'll do here, you can definitely see this was a head and shoulder. But once you get a well-trained eye, what you're going, actually, I think that was that level. We have to go back way further. We're not going to spend our time doing that. But I think you get what I'm, seeing here. Anytime you develop your eye, you're going to begin to see these nice little reversals, and you're going to say, hey, that looks like a head and shoulders. And you should be able to spot these once you're a pretty well-trained trader. So, but this was a head and shoulders down here. And then this is the buy program right here. We took prices from around 95 all the way up to, gosh, about $1.03, so that's about 800 pips. Another nice big buy program here, another buy program here, another buy program here, another huge buy program right here. This is the one that I'm really watching. Notice the big candles down here. There was a serious fight down here. Anytime you have big candles like this is institutions buying and selling, so you have to watch those levels. But there was a nice area of congestion, consolidation, reversal pattern down here. And how long did this take? This was 1, 2, 3, 4, 5, 6 weeks of sideways price action before buyers could take over this market. Anytime you see something like this, this is a huge, 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 huge level. And you can see it more over here. You had a buy program here, like I said, and right here and right here. So this right here definitely had my attention. And again, like I said, you had buy programs here, buy programs here, buy programs here, buy programs here, and buy programs here. And of course, this head and shoulders. Anytime you see a head and shoulders in the market, definitely watch the shoulder level, because you had buyers pushing price up here, buyers pushing price up here. And then, of course, you had buyers at the head pushing prices up here, but there's more buyers at the shoulders than there are at the head, so it is more likely to reverse at the shoulder. That's why we pushed up here, we pushed up here, we pushed up here, and we pushed up here. We were at the shoulder level. So, of course, this is where the market wants to reverse. So, naturally, I was looking for price to come down into this zone right here. And did it come down to our zone? No, it did not quite come down to my zone. That's the struggle when it comes to being so picky with your trades. A lot of times they're not going to come down to where you want them to, but I am okay with missing a trade because, like I said, I only need a couple trades a month, and I am very content, especially when I'm trading daily or weekly time frames when you're looking at several hundred pips per trade. But why did this reverse when it did? Something I want to point out to you is this. Let me zoom in just a little bit here. You have this huge buy program right here. How long did it take for us to push from these levels here all the way up to here? This was January 2017, and we topped out over here on this move in March of 2017. This is a weekly time frame. This only took a few weeks. Now, compare this to the pullback down to the bottom. This over here, this wave, this huge move down, several legs in this, but this huge move down started in March of 2017 and took all the way to December. This took way longer than it did to rise. Anytime you have a big leg up like this and a slow retracement back to the lows, that is a very high quality setup. If I'm ever taking a double bottom or a double top, what I don't want to see is this. Let me pull this up. If you look at the Aussie right now on the 4-hour time frame, actually let's pull up the daily. You can see a relatively quick rise here, but when we came back down to the bottom, this thing is getting slammed. While oftentimes they will reverse down here, do you really want to take a trade, though, that is got this kind of momentum? Do you really want to take a trade that is, probably going to fail a good 40% of the time or more? Probably not. You don't want to see this kind of momentum when you're dealing with a potential double bottom. So the likelihood of this doing a major reversal is very minimal. In fact, if anything, it may bounce a little bit and then collapse. I could see this definitely collapsing in the future. If it doesn't, I'll be very shocked. But going back to our odd CAD trade right here, let's pull back up the weekly charts. What we've got here is we've got a slow retracement back down, and of course, we were coming to our major reversal bands. I did see this as well as this trend line. And I said, there's a good chance this thing could be getting ready to reverse down here rather than right here. But this is the level that I really wanted. You might say, well, why didn't you take some there and, buy some more down here? Because my spread is too big. I don't like to get into trades where the spread is that big. But it's very obvious if you know price action that this could be getting ready to reverse. Again, we made this massive leg up and this slow retracement back down. This is a very, and I mean a very bullish setup. What I wanted to see is I wanted to see price come all the way down to here, but it did not do it. Also notice when it came down to support, we went all the way across your screen like this, and your pullbacks were very minimal. What I mean by that is we never had a change in trend. How do I know this? Because price never closed above the upper bands here and continued higher. Instead, the bands acted as resistance every single time. So this is one giant trend in my eyes. But we came all the way down to here. But again, what I wanted was this level down here, and I would have placed a buy program on this and rode this baby up. As you can see, it did reverse down here. Again, we had the trend line down here. We had a major level, and then we had a slow retracement after a massive pop. All of those things are very, very bullish. But again, I wanted a better price, so I didn't grab this. But where did this stop at? This stopped at around 96, and we've gone all the way up to $1.02. That is 600 pips. That's a massive move. And I mean, you could have bought down here and just sat on this for weeks on end and made your money. But this is the trade that I was looking at. Again, like I said, price action down here was very bullish, but I am very picky, so I wanted something a little better down here. Now what I'm looking at is this. I actually issued an alert for my premium group to sell this thing right here. It was actually 102.75, and most likely the high is going to be right around there. Why am I looking for this level? So let's take a close look at what this market is doing. You had your bottom down here. Let's zoom out actually. You have your bottom right down here. You had a strong push up. You had your pullback, another wave up, and we tested this area. The market was unable to break. This is not a break. This is a spike, and this is not something you should be going long. Again, like I said, a lot of traders, what they'll do, they'll see resistance being broken. Never mind the fact that we just went all the way up here with no pullback. Again, but when I say no pullback, I mean we didn't have a cross of the bands. So in my eyes, this is very exhausted, and this is a fantastic area to short. Obviously, the level that I would really love to short is up here, but nonetheless, still a pretty good area to short. So you would never want to go long once we broke this level because that's just ignorant. You just don't do that. But you can see it fell. Again, we have got a low here, and we've got a high here. We've got a low here, and we've got a high here. We've got a low here, and then we've got another high here. We keep making lower lows. In fact, I could probably draw a trend line about right here like this. You have a bottom here, bottom here, bottom here, bottom here. So the trend is very much up. So this should continue to move up here. Would I take a short here? Absolutely not. We've hit it one time, two times, three times. A fourth time would have been a no-go. Normally, the market is going to break down on the fourth or fifth hit of a level. So I would absolutely not want to take a trade on this, especially with the lows getting higher and higher. That just becomes dangerous. Why? That tells me that buyers are coming in and slamming price into resistance over and over and over and over and over. If I beat on a door long enough, it's finally going to break. So we are able to keep pushing prices up into this resistance level, and also notice the lows are getting higher, which means what? It means less and less sellers are showing up to this party. So you really don't want to short up here. But as you can see here, it wasn't able to make it. In fact, what did it do? It came back up here and it broke down, and we went all the way back down to this low right here, which again was the area where we had our major reversal. Why is this important? It's important because we broke the trend right here, and we had an excessive sell-off off of this level. Because we broke the trend, and because the sell-off was so dang excessive right off of this high here, you should instantly know, yes, this has been hit many times. This is going to be the fourth time. But again, the last selling program off of this level was very significant. I'm saying that very slowly so you understand. But this sell program was very significant. We came all the way back down, and we have come all the way back up into these levels with no real retracement, which means price is exhausted. That is why I gave this as a sell alert to my premium group. Because we are exhausted, and because we had a massive sell program off of this the last time. Now, what would have happened if we would have came up to here, pulled back just a little bit, and then gone up again? This would not in any way be a sell up here. Even if it would have, let's say it popped up to here and then came all the way down to here, I would still be pretty skeptical because we didn't take out this trend line really. Well, I guess if it came down here, we take it out just by a little bit. But I'm still not convinced. The deeper this pullback is, the stronger this is going to be, especially when you get an exhaustion move up into it. There's been no pullback. Let's say we had our top right here, and then we just come down, 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 down. We come all the way down here. That means there's a crazy amount of new sellers that came in off of this top. So if it were to be able to go up, 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 no pullback, all the way up here, and there's been no pullback, how likely do you think they're going to be able to push price through these levels? Again, remember, you had a ton of new sellers coming into this market. Here's the buyers, here's the buyers, here's the buyers, here's the buyers, and they gave way. Sellers took over the market at this point. This should not happen. So because they were able to take over the market and they began up here, anytime you have a retracement back up into these levels, you should be looking at shorting because you have a ton of new sellers that came in up here. So this is definitely a shortable opportunity up here, and that's why I've been looking to sell it. Unfortunately, what has happened here? They came about 30 pips from my entry zone, and then they collapsed price. So this thing has dropped about 150 pips without me, which is very depressing. But what can you do? So I'm still waiting on this, and I'll be watching price, in the coming days and coming weeks to determine if I want to get into this level once we push up into this. One of the things I have not taught you about is timing here, which is very, very essential. As of right now, the timing is definitely working in our favor. This is very overdone, but I'm going to watch this in the coming days. If this, for example, tries to create a top, comes down a bit, and then goes up, I'm going to be much, much less likely to take this. But right now, this has not breathed in a long time, and it's getting very, very tired, so it needs to pull back. So that's why I'm interested in it. But like I said, if it were to come up here, consolidate, do its thing, and then try to go up, that is absolutely not a buy. Or excuse me, that's absolutely not a sell. You don't want that. But like I said, price, we've got a bunch of new sellers that have come in off this level down here, or up here. And now price is very, very, very exhausted. It's very tired. Same thing with the Aussie. I called this short as a trade for my premium group not too long ago. We saw a massive, 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 massive move all the way up to the top here. And it's funny, we spiked above it like by 2 or 3 pips, maybe 5 pips, I don't know. But I had my sell orders up here, and we rode this down in pretty good ways. It was very obvious this thing was getting ready to roll over. You cannot continue up like this with no, well, again, notice there's no pullback to the top. You just cannot continue to push up into these levels and expect to blow through and continue up. It's just not going to happen. I mean, that would be like, I don't know, hell freezing over. So, and if you look at the weekly time frame too, by the way, let me show you this. What were we doing here? Again, this pullback was very strong, so I expected this thing to roll over, and we did have 1, 2, 3, 4, 5, 6, 7 weeks in a row of bullish action, and so it was getting tired. And not only that, but this was a very historic high that we've been unable to break on a higher time frame. Historic highs are much more important than a historic high on a lower time frame, by the way. Just keep that in mind. But where were we at? We were at the 800, 750, 850 EMAs. Again, this is a major reversal level, and it was being tagged yet again. So that's why I was very interested in this level as a short up here. Not only was it exhausted, but we did have a massive, massive brick wall right here. But anyways, I mean, that's just a little bit on price action I want to teach you guys. Didn't go over the momentum really, didn't really touch on the timing aspect of it, but it's really essential that you understand the market and the way it's moving here. Anytime you have exhaustion moving into a major level, you've definitely got to watch. You also have to watch the momentum and how quickly these markets are reversing and the way they're doing their thing. I mean, there's a lot to be said about price action, but if you don't fully understand it and how this market works, you're going to really struggle as a trader. So, but just want to throw this out here this week. Hopefully this clears some things up and gives you guys a greater understanding of how price moves and how to identify very high quality trade setups. So anyways, until next time, guys, have a great weekend, and I'll see you later.